You know, a few people have come to me recently with questions about how construction accounting and financial statements differ from those of other companies. This is an important topic because construction accounting deals with managing large, long-term projects, which means job progress doesn't fit neatly into monthly reports. Before we dive in, I've prepared a downloadable spreadsheet with the reports we'll be covering in this video, including the formulas. Feel free to download it. It's free and it can help you follow along as you go through the reports. Today we're going to dive into some basic differences between the construction and non-construction accounting. I'm assuming you already know the basics of the balance sheet and the income statement, but if not, feel free to check out one of my earlier videos to get caught up to speed. Now if you're ready, let's begin. Here's the plan. We'll start by discussing the costs and billings of a construction job, then move into the WIP schedule, the balance sheet, and the income statement. And if time allows, we'll touch on the statement of cash flows. We're going to look at an example from the perspective of a fictitious construction company. We have a job or a project for Biggie Tech with a contract of $5,500,000. Based on our estimates, we expect the total cost of the job to land at about $3,575,000, which gives us a gross profit of $1,925,000, or a 35% gross margin. This job started this year, but won't be completed until next year. And here's where we stand as of year end. Labor at $1,072,500, materials $357,500, subcontractors $268,125, equipment $60,500, other costs $28,875. So the total costs to date are $1,787,500. We have invoiced our customer for the work completed so far, which amounts to $3,757,000. Let's compare that to our total estimated costs. We have incurred 50% of the total estimated costs, but we billed 65% of the total contract price. This means we've overbilled by about 15%. Overbilling is when you've invoiced for more work than you've actually completed, while underbilling is when you've done more work than you've billed for. These differences flow into the financials and are tracked as either billings in excess of costs or costs in excess of billings. For more on this specific topic, you can watch one of my previous videos on this. Now let's look at the work in progress report or WIP report to see how these figures are laid out. In this report, you'll see columns for job names, contract amounts, percentage complete, billings to date. Notice that here our project for Biggie Tech shows billings of 65% of the contract, but a cost completion of only about 50%. The over/under billing amounts for all the jobs are captured in the final columns of the report as billings in excess of costs or costs in excess of billings. The total at the bottom gives us the net over or under billing for all the open jobs. Remember, if you'd like to see these reports in more detail or explore the formulas, the spreadsheet is available to download for free. It can be helpful as we move through these financials. Now let's tie this back to the financial statements. Looking at the income statement, you'll see a line for contract billings and an over/under billing adjustment. In this case, the adjustment is a negative $477,372 because we've overbilled on our jobs, meaning we cannot recognize that amount as revenue just yet. Assuming nothing bad happens along the way, this will eventually flow into revenue as we perform the work. Switching over to the balance sheet, in the current assets section, we see a line for costs in excess of billings, or sometimes called contract assets. This represents work we've done but we haven't billed for, and it totals $540,275. Similarly, in the current liability section, we have a billings in excess of costs, or sometimes called contract liabilities, totaling $1,017,647, which represents amounts billed but not yet earned. These amounts come from the WIP schedule that we looked at earlier. Now that we've covered the numbers and adjustments for year one, let's fast forward to the end of the next year and see how things change as some projects progress and new ones are added. Here's the WIP schedule for the end of year two. You'll notice that the previous jobs are still listed, along with some new ones. Some of last year's jobs have been completed, and others are ongoing. The completion percentages have been updated to reflect additional costs incurred since the previous report. For jobs that are complete, you'll see zeros in the over or under billing columns, meaning that the billings and the earned revenue align for these jobs. In normal practice, these rows would be moved to a different section or a different report so as not to confuse the reader. The active jobs would be reported together, and the inactive jobs would be reported together in a different area. But to illustrate the concepts, I am leaving them together here. The totals at the bottom show the costs in excess of billings and billings in excess of costs. They have both changed from the prior year, reflecting the completion of older jobs and the progress on the new jobs. For example, the net overbilling on the WIP report is now $131,715, indicating that we have underbilled on our open jobs for year two. Now let's take a look at the income statement for year two. You'll see the contract billings for the current year are $15,330,419. But the total billings on the WIP report show $24,249,420, which includes billings from the prior year as well as the current year. The income statement only shows the amount billed during year two, which explains the difference. The over or under billing adjustment for year two is a positive $131,715. This adjustment adds to the revenue because, based on our progress on the jobs, we have underbilled. So according to the accounting standards, we adjust our revenue up by this underbilled amount. On the balance sheet for year two, you'll again see the special current asset and current liability lines for costs in excess of billings and billings in excess of costs. The values for these accounts now match up to the updated amounts in the WIP report, reflecting our underbilled or overbilled positions on open jobs at the end of the year. Finally, let's look at the statement of cash flows for year two. Here we capture the changes in the costs in excess of billings and billings in excess of cost accounts from year one to year two. The cost in excess of billings account increased from $540,275 to $1,303,081, a rise of $762,806. This increase shows up as a decrease in cash because it represents costs incurred for which we haven't billed yet. On the other hand, billings in excess of costs increased by $153,719. So it went from $1,017,647 to $1,171,366. As a liability, this increase is a cash inflow, reflecting billings we've received for work not yet completed. Just a quick reminder, you can download a free spreadsheet with all these reports to see the calculations in more detail. It's a great resource if you want to explore this in depth after watching this video. So by looking at both years, we see how the construction accounting requires tracking the progress of each job over time and adjusting the financial statements to reflect the over or under billings. These adjustments impact not only the income statement and the balance sheet, but also the statement of cash flows. If you found this helpful, hit the like button. Go ahead and subscribe to this channel and ring the bell for notifications. And if the spreadsheet was useful, let me know in the comment section down below. And until next time, have a great day.